What's up, and welcome to this video where we are talking about 3 stocks that are insanely undervalued right now, and they also have huge dividend yields. These 3 stocks either have a dividend yield within the 8 to 9% range, so these are incredible dividend yields, giving you that passive income in your portfolio that everybody wants to achieve. What we're looking at right now is my current portfolio. If you want access to this portfolio, all you have to do is check the link in the description or in the comments below where it says dividend portfolio. It'll take you there. It's 100% free, but you can check that out for yourself. Not going to talk about that right now. All I ask that if you do enjoy this video, you make sure to give it a thumbs up and you subscribe. You turn on post notifications for videos coming out every other day on dividend stocks, passive income, all that good stuff. I'm helping everybody that I can make the most money in this market and build a nice passive dividend income portfolio. But enough of that talk, let's get into these 3 stocks. So the first stock we're talking about is ticker BCSF, Bain Capital Specialty Financing Corporation. Now let me go on to say first, I currently at the moment am not invested in any of these 3 stocks. We'll talk about my favorite 3, ranking these in least to greatest, what I like about these stocks at the end of this video, so make sure you stay for that. But enough of that, let's get into the stock. So as we can see, this stock currently trades for $15.74 a share. Over this past year is up 46.55% and has a dividend yield of 8.64% and a market cap of $1 billion. Now their forward price to earnings ratio is 11.56, and what we'll look right here is that it says that their payout ratio is 100%. Now that is actually inaccurate. We can look on some things, and their payout ratio leads out to a very low number of just 61.82%. Whenever you take their earnings per share and their dividend payout, it's 61%. Their trailing annual dividend yield is 8.98%, and their forward is 8.64%. The one reason why I currently am not invested in this company is the quarterly earnings growth year over year is negative 54.6%. I want to say, we'll look at it later actually, we'll just look at these numbers later in the video, but they have a nice profit margin of 7.066% and a trailing price to earnings ratio of 7.24, which is very, very low, meaning that this company is highly undervalued. Looking at their dividend history, they've been paying pretty solid dividends pretty consistently of 34 cents per share. They were paying at 41 cents per share until COVID happened. You can see that their stock price dipped, and then what happened? They started to lower those dividends, and they have kept them very steadily and very consistently over the past few years. But what we'll see is that this company operates as a BDC, specializing in direct loans to middle market companies. And pretty much what a middle market company is, it is any company that is making revenues in between $10 million to $1 billion on an annual basis. And this company seeks to invest in senior investments with first or second line on collateral, senior first line, stretch senior, senior second, the list goes on and on. They pretty much make debt investments and collect that income, so it's a nice high dividend yielding stock. As we can see, what we'll see is that these dividends, this total revenue is increasing kind of a little bit all over the place. 2020 was a very rough year, but the trailing 12 months have been better than ever. The net income is incredible at $137 million. Balance sheet right here, pretty solid. The only thing that strikes me is that their assets did decrease a little bit, but so did their liabilities, so that's okay. Cash flow looking pretty solid. Nice. Free cash flow used to not be that good, but over the past trailing 12 months in 2020, we've had some good numbers. Repayment of debt, they did pay off a lot of debt, and they did buy a lot of assets and financing cash flow. But looking on to some more things, here is kind of just a nice portfolio overview of this company. Their current portfolio is estimated at roughly $2.35 billion with 105 companies. Their average yield at amortized cost is 7.5%. They're in 29 different industries. Looking on some different things, the number one thing, here's what we're talking about, is their net income per share was 80 cents in Q3 of 2020, but in Q3 of 2021 it was 36 cents, and that does not strike me as a good sign. You can see that their net income per share was actually decreasing a little bit. Now they talked about it's because of some interest rates that they're paying, some expenses that they had, so it does make sense. And it's just something that I don't know if I want to put my money necessarily in there. It's a risk that I'm not willing to take in my portfolio. But if you want to, I made this video to give this stock out and bring this information to you. Now, I'm not suggesting that you buy the stock. Remember, everything on this channel is not financial advice, strictly for entertainment and educational purposes only. But they're still paying that 34 cents per share, so they're still in a net income positive compared to how much they're paying per share. They're not going into debt. They're not taking on this leverage that they can't pay, so they are still being consistent with those dividends. Now, what we'll see right here is that this net income, all these different things, we talked about this same stuff. Numbers were just kind of decreasing. I don't like to see that. If we want to take ever since this company started trade public on November 15th of 2018, just an annualized return of what you got if you invested $10,000 and you were reinvesting your dividends, you'd have a start price of 18 per share. The share price has decreased since then to $15.92, but your investment value would be up by 22% because of dividends. You would have started with 555 shares, and with dividend reinvestment, you would have ended with 752 shares, and that is just over a 3-year period, which is incredible stuff. Your annualized return is about 6.9%, but if you added some extra math in there, you would be getting a lot of dividends income collected because of all your new shares and your yield on cost, different things like that. But let's talk about the second stock on this list, which is ticker CGBD. TCG BDC Incorporation. Over this past year, they are up 43.8% with a whopping dividend yield of 9.14% and a forward PE of 9.18 and a market cap of $750 million. They have a payout ratio, it says on Seeking Alpha, of 84%, but Yahoo Finance is something else. We'll see is that they pay these dividends on a quarterly basis. Here's just some dividend track record. Same exact stuff that we pretty much saw with BCSF, is that they were just paying these dividends and then COVID hit, and then they started to pay these dividends a little bit smaller, but they still have been very consistent with those dividend payments. So what this company does is they're an externally managed specialty finance company focused on providing flexible financing solutions to middle market companies, primarily located in the United States. They focus on investing in companies backed by private equity sponsors across a variety of industries that exhibit defensive niche strategies and have sustainable leading market positions. So they're only making investments in companies that other people have strong belief and strong conviction in, and that they believe have a nice moat over their competitors. Now looking on this company, their total revenue is growing steadily year over year, kind of until COVID happened, and then you have the trailing 12 months, which have been absolutely incredible. Net income very solid at 164, pretty much $165 million. Those are some nice margins if you asked me. Their balance sheet looking pretty solid, but same thing, liabilities decreased, so did their assets. Cash flow, let's look on that real quick. Free cash flow is still pretty solid, but it has decreased since 2020, so that does give me a little bit of concern. But what I would assume this is from is repurchase of capital stock, a lot of repayment of debt, and financing cash flow, different things like that. But who knows? There's a lot of different things you can look into. We're not going to go that deep into this video because that will make this video very, very long. Their trailing PE ratio is 5.01. They have an incredible profit margin of 96%. Their quarterly earnings growth year over year is 41.7%, which I do really like to see whenever I'm investing in a company. I like to see that their quarterly earnings is increasing steadily. Now, don't get me wrong. Just because it has increased in the past does not mean it's going to increase in the future, but it does give you better sentiment on what the future could look like. They got 9.22% annual dividend yield with a payout ratio of 46.21%, which is solid stuff. Their total investment income has slowly increased from Q2 of 2021 to Q3 of 2021, and what we'll see right here is that their total investment value is about $1.95 billion, which is incredible stuff, and they're still trading with a market cap of $750 million. Do what you want with that information. If we invested in them whenever they started in June of 2017 with the same analysis, you would have started at $18 per share, ended at $13 per share, which is not what you always like to see, but you would have added nearly 400 more shares onto your portfolio, having a total return of 27.9% and an annualized return of 5.74. You would have a very, very solid yield on cost. Now let's talk about the third dividend stock on this list, which is ticker NREF. Next Point Real Estate Finance Incorporation, up 48.6% over the past year, a forward PE ratio of 9.22, and a dividend yield of 8.53%, with a market cap of $456.45 million. It says right here on Seeking Alpha that they have a 78.88% payout ratio, and they pay their dividends on a quarterly basis. They have been kind of all over the place, but slowly increasing these dividends ever since 2020, which is incredible stuff to see. You always like to see that your dividends are being increased. Now we'll see that this company operates as a real estate financing company in the US, focuses on originating, structuring, and investing in first mortgage loans, mezzanine loans, preferred equity, and preferred stock, as well as multifamily commercial mortgage-backed securities securitizations. So they are a REIT, what we can see right here, or they're trying to become a REIT at the moment because of taxes and different things like that pay out to the shareholders. And we'll see that the income is slowly increasing ever since they started. Their net income is very solid this year at $29.5 million. Their balance sheet is pretty solid as well, $6.1 billion in assets to $6 billion in liabilities, and their cash flow sitting pretty solid, free cash flow increasing, which we would like to see, paying off some debt, different good things that we're looking at right now. Their trailing PE ratio is 5.62. They have a profit margin of 39%. Quarterly revenue growth is 97%, and quarterly earnings growth year over year is 277%, and a payout ratio of 46.3%. Analysts like the stock, giving it a 12.15% upside over a 1-year timeline. And if we were to invest in this company when they started back in February of 2020, we would be sitting on a total return of 33.95% and an annualized return of 18.06%, added about 100 new shares. So pretty solid investment if you were to have invested back then. But everybody, that is what I have for you in this video. So if you did enjoy it, make sure to subscribe and turn on post notifications for videos coming out every other day. I would like to see what you guys are doing, what you guys are thinking. So make sure to leave a comment below which of these stocks you like. And I actually just completely forgot. My favorite stock on the list goes CGBD, and then NREF, and then BCSF. But none of that, all that good stuff out there. I'm not invested in any of these companies at the moment. But again, yada yada, not going to waste your time. Just make sure to subscribe, turn on those post notifications for videos coming out every other day. Thank you again, and I will see you at the next video.